Assalamu alaikum. I am Jawad Ahmed, and we are now in our second class on our journal entries. In previous class, we have already discussed what are the basis audible entry system. Now I am making a simple rule to make you understand the entries in a better way. So let's start our class. Entries in assets and expenses will be debited. So whenever any asset or any expense is increased, that will be called an increase on the debit side. Second, increase in capital liabilities, income, sales will be credit. So here we have make two rules. First one is for our debit and other for our credit. If any asset or expenses are increased, then we will call it a debit one. Increase in asset and expense will be debited, and increase in capital, liabilities, income, and sales will be credited. So you have to keep all these two rules in mind. These are very simple and easy to learn. First one is increase in asset and expense will be debited, and increase in capital, liabilities, income, and sales will be credited. So let's now we have to study some examples to make this concept stronger. First one, the first example we are going to study is capital brought by honor in cash. So in previous class we have already discussed what two items will be affected. First, the capital will increase, and the other thing that is affecting is the cash, business cash. Business cash will increase, and business liability called as capital will also be increased. So capital is a liability for a business, and cash are the assets of a business. Liabilities are increasing, so increase in liability will be credit. So liability will be credit, and asset are increasing. Increase in asset will be debited, so it will be debited. So the journal entry that we are going to pass in our journal or day book will be cash debit and capital credit. Debit items are placed on the left side, and credit items are always placed on a slighter right hand side of a journal entry. So the entry that you will remember from now onwards, whenever a capital is brought by the owner in the form of cash, will be cash debit, capital credit. Move to the next example. Capital brought into bank funds or bank check. So we have already studied in our previous class, whose link is always already placed in description. You can also watch that one first, then move to the current video. Here two items are affected. First one is capital. Whenever a capital is brought by the owner in the business, the existing amount of capital increases. So capital always increases when it is brought by the owner into the business. Here I am already illustrated you that here we are thinking like a business, not a human being. The business will say that the amount of capital has increases, and the other item that has increases is the bank balance. Bank balance has also increases. Here capital is a liability, already discussed in previous class, that this amount will need to be paid to the owner at the time of winding up of the business, or when he requests us to pay this amount. And the other thing that is increasing is the bank balance. Bank is however an asset, already studied in the previous class. What are the assets? Assets are those items or funds or any tangible or intangible item that benefit the business in future terms. So assets are increasing and liabilities are increasing. Increase in liability will be credited and increase in asset will be debited. So the journal entry whenever owner brought cash into the business will be bank debit, capital credit. So here we have already discussed two examples in which the capital is brought by the owner, firstly in the form of cash, then the entry will be cash debit, capital credit. And the other example in which the capital is brought in the form of check or bank balance, the journal entry will be bank debit, capital credit. And because on one side our assets are increasing and on other second side the liabilities are increasing. Now move to the third example. Capital brought in the form of asset. For example, the owner has brought an AC into the business for business use. So the two items that mainly affecting here are firstly the capital and the second one our asset, that is here AC. So the business will say that business asset increased and capital, that is the liability of the business, is also increases. So the journal entry will be increase in asset will be debited and increase in liability will be credited. So the journal entry here will be AC debit and capital credit. So three examples have been discussed regarding to capital. Now move to the next category, loan transactions. First one is bank loan obtained. So what will happen when a bank loan is taken? Firstly, funds will be received in the form of cash or check. Then the cash in the business will increase. And on another hand, we are thinking, or our business will be thinking that business liability has increased, that business have to pay this sum or the borrowed amount to the bank with the amount of interest at a future date. So business liability or loan liability increases. So cash is our an asset. So increase in asset will be debited and increase in liability will be credited. So the journal entry here will be cash debit, bank loan credit. This is our debit item and the credit item is bank loan. Cash debit, bank loan credit. And when this sum is paid to the bank, borrowed loan given back to bank. So here two items are affected. First is borrowed loan whose liability has been generated in this entry, and the other item that will be factored is the given back to the bank, that we have given back to the bank. So the cash available in the business drawer will also be decreases, or the bank balance will be decreases if it is paid through a check. So the entry will be bank loan debit and cash decreases or bank balance decreases. This was debit item and this was credit one. Okay, these are two examples of loan transactions. Now move to the third category, that is fixed asset transactions. First example is fixed asset fixed asset. For example, AC brought into business and paid through cash. So now think which two items are affecting here. First one is AC, that is our business asset, because future benefits are expected to receive from this AC through receiving its cooling or heating. And the second item that is affected is it is paid through cash. Business as AC will be increasing and business cash that is paid against this transaction will decrease. So AC is an asset and cash is also an asset. Here one asset is increasing and other one is decreasing. So the journal entry will be increase in asset will be debit, AC debit, and decrease in cash will be credit. So AC debit, cash credit. And what will happen is this asset is brought on credit basis that we have agreed to pay our vendor at a future date. So now the entry will be fixed assets are increasing and the liability to pay to Mr. Ahmed for this AC will also increase. So two transactions are taking part here. First one is our assets, means number of ACs are increasing, and on the other side our liability to pay to Mr. Ahmed regarding this AC will also increases. So increase in asset will be debited, AC debit, and liability to pay Mr. Ahmed payable to Ahmed credit. And when we pay this sum to Mr. Ahmed, then the cash will decrease as it is paid to the Mr. Ahmed, and the liability to pay to Mr. Ahmed decreases. So the entry will be payable to Ahmed debit that were previously created by crediting. Now we are discharged from our liability, therefore we are debiting, so that both items cancel each other. And the cash that is given to the vendor will also decreases. So if increase in liability is credited, then decrease in liability will be debited. Means you can take this example on the contract basis or on a vice versa basis. I have already mentioned increase in asset and expense will be debited. It means that decrease in asset and expense will be credited, and decrease in capital and liabilities will be debited. So these are fixed asset related transactions. So let's meet in the next class with other journal entries. Thank you for your time.